Welcome to the stream. Welcome everybody. Shout out to everybody who joined and waited patiently in the waiting room while my lackluster taking capable ass was trying to figure it out. I have a special guest with me today. In case you've been living under a rock, I got Richard from the Plain Bagel. Richard is a CFA, CFP. He's an actual analyst working for an actual investment management firm, and he has a highly successful YouTube channel, which is almost at 350,000 subscribers. He makes dope videos, zero hype, all educational, extremely knowledgeable, and it's my pleasure to have him on here to talk shop a little bit about what's going on with the market right now, what's going on with the economy, and play a little bit of these kind of forecasting games as far as where we headed as a in general as the stock market and economy kind of bounces back. Richard, what's up?
Not much, man. Thank you. You flatter me, and I feel like I have a lot to live up to now. But not much. It's been a crazy, as everyone knows, a crazy few weeks in the market lately. So that's been keeping me busy. But it's good. I should also mention that I've mentioned on my channel, but my wife and I recently had our first child. So there's a very good chance at some point. I've tried my best to soundproof. I have a blanket up against my door, but there's a good chance we might hear a baby in the background at some point.
Well, but, I got 3 kids. I know exactly what you mean.
No kidding. Oh wow.
Yeah. So it's normal. It's part of life. Mine are 3, 5, and 7. So I know exactly.
Oh wow. Yeah. So he's 2 months. We have a bit to go.
Oh yeah. So you ain't getting much sleep lately. That's what I would imagine. Not a lot of sleep going on.
It's not too bad. Like you have bad nights, and what I will say is, so my wife's off work. Yeah, I'm still working right now, and with that, she's been kind of taking the brunt of it at nighttime. I've been doing okay, and I try to help where I can, but she's been really being a champ through the whole thing, and I'm so we make a good team. I try to take it I try to take him in the evening and afternoon, and she takes him at night. And so far, we've both been able to get a bit of sleep. It's not like the sleepless nights.
Yeah.
And when we can,
it will come. Don't worry, it will come.
Yeah, that's what I've been told.
The gases will come and the teeth will come. All the good stuff that will.
Yeah, I know. Oh, the gas is already there.
Oh yeah. Okay, good.
Yeah.
So let's talk shop, Richard, since I have you here for an hour.
Sure.
I hate the term "pick your brain." It sounds so nasty, but I'd like to get your input on a few things. Obviously, we had a massive day today, and an incredible stock rally, especially in anything tech related. Right, a huge surge. We saw bond yields drop quite dramatically, and of course, everybody flocked back as usual. Overreaction time on the stock market. Everybody's manic depressive. This year is just made it even worse. It's just it's so fidgety. It's like it's insane. So we saw a really crazy day. I literally went up by I think 15% in my portfolio today, and I was down by. So I basically broke even for the last 2 weeks. I went down 15%, and it all bounced back today. So what the hell is going on? I mean, I have my theories. You're probably not gonna like them, but I mean, what the hell is going on, Richard? I mean, you're the analyst here.
Yeah, I mean, it's hard to say. Like, I think the thing with financial markets is, you only ever figure out exactly what's going on a year or two after it's happened. Up until that point, people have guesses and they try to figure out, live what's going on. But it usually, it's kind of best guessing at this point. When it comes to with the markets, I mean, everyone knows that a lot of it is tied to rising yields, some inflation concerns as well. But the problem is, a lot of it is just sentiment. On a day-to-day basis, the markets can fluctuate so dramatically. And especially when you talk about tech companies, which, today had a good day, the past weeks have really been the ones being hammered. When it comes to those companies, I think a lot of the reason why you see those positions being more volatile is because they have the more rich valuations. And when you have things like a fear of inflation, which inherently kind of discounts the future cash flows you'll see in the future with these tech stocks, it makes those fluffier valuations a bit. I don't want to say more dangerous, but they're kind of the first things to go sometimes. Now, tech has its own benefits in other areas. Like a lot of tech companies are very profitable. That's a thing you see in it versus something like an industrial company. But they do have this high valuation because a lot of money has been flowing into it over the past decade. And now that, we see kind of the possibly moving further through the cycle with yields rising, the risk of interest rates rising into the future, I think a lot of people are just, it's a weight on those fluffier valuations.
So I spoke about it before on my channel, and I basically, I used my definition was that bond yields are essentially the barometer of what people think about inflation, right? It's quite simple. I like to keep things simple on my channel because I'm an idiot. So I explain things like I want things to be explained to me.
I don't think that makes you very smart. I think being able to explain complicated things that's idiot friendly, I guess.
No,
it takes the skill.
I'll tell you why. I'll give you a little story, and then I'll tell you what I think. So when I was in business school, I was doing my MBA. My finance professor was a guy who was ex Lehman Brothers, and he was pretty much the smartest guy I've ever seen in my life. He was so sharp, very very fast. Couldn't understand the word he was saying. I mean, and he couldn't understand why I can't understand. I mean, he was so out there as far as his skill set. Like he wouldn't understand how these peasants don't understand such simple thing. And when you're too smart, you're unable to understand what simple should look like. So basically, I basically said one simple thing on my chat. I did a whole video about it, and I said, "Hey, listen. If in general the market feels that inflation is about to go up because of different things like printing a lot of money, reopening, we all know this shit, right? So if the sentiment is that inflation is going up, obviously people are not going to be buying bond yields at 1.5, 1.4% because it's a losing deal. I mean, over a 10-year period, pretty much demand goes down, yields go up because prices go down, and then the faster that process happens, the steeper the curve, the more the fear the fear is, and then people flock away from anything that has a story, right?
Mm-hmm.
Anything that has a stock that has a story, a future, anything that as you mentioned, far away, then so essentially DCFs change dramatically with if you just change a couple of percent, you can really kill the valuation. So interest rates go up, DCFs of tech companies that are more further away kind of go down, and then we saw what we saw. What I found amusing, and tell me what you think about that, is that people sold off tech companies just because they were tech companies, and they were selling off cash flow positive companies like Apple, like Facebook, like Google. Like, why are you selling these?
Yeah, it's that's the thing about and it's a tough game, and there's multiple ways to invest, and outside of investing there's trading, which is more short term, and so with my company and my experience, I've been kind of trained in a very long-term fashion, and it's a very boring approach. So a lot of those day-to-day fluctuations, you kind of just learn that the markets are very, you put it yourself, they're very moody, and on a day-to-day basis, they're not always rational. It's not to say that the markets don't exhibit some degree of efficiency. That's a whole other debate that you can get into. But what it does say is on a day-to-day basis, you can take it or leave it that the markets are going to be a little crazy. So, and you raise a good point. There are with the sell-off in tech, I think Tesla is a big one that has been moving a lot. I mean, today I think it's up around 20%. Yesterday it was down single digits, but over the past few weeks it's been down quite a bit.
Insane.
With that versus an Apple, you mentioned, Apple, I understand why it's a little confusing because there's heavy cash position. Tesla, I think it comes down to, like you said,
Tesla agree 100%. If but I mean Apple, I mean,
Yeah,
it's cash.
the thing with Apple too is Apple is still relatively expensive, but it's not on a Tesla level. So I think when you have something like rising rates or rising yields, it's like a rising tide, but the opposite, a sinking tide. It brings
Yes,
all valuations down. It hits the Teslas harder, but it'll also hit the Apples, which, even before this, I think they had over 30 times forward multiple, which is a limited metric, but they still had a kind of an expanded valuation to some degree. And whether it's worth it or not, only time will tell. But that's kind of why you see, and part of it too is people being kind of more cyclical in nature. We've also seen at the same time tech has been falling. We've seen energy companies doing well,
Yep.
oil companies doing well. I mean, more recently that's kind of tied to the oil prices. But those cyclical companies that early on in the cycle, those are kind of coming to the forefront, and people are risk on in some degree with those companies, taking money out of the more fluffier valued companies.
I agree with this, and it separated the boys from the men, and it's also from the investor side. I mean, I sold 0 shares during this dip. I was like, why? I mean, basically my theory is, and I kind of when I do my kind of I try to educate total like principles. I say, well, people were saying, well, Tom, why would we care about fundamentals? Why would we just not buy stock because stonks only go up, right? And I was like, okay, dude, beyond the fact that you haven't seen real crashes, and I mean, you probably read about them because I'm 40 years old, so much older than you, but I've actually lived through the other two as an adult. So I've seen what happens, how fast the market can crash. But let's just leave it to the side, right? Let's not talk about the market crash. Let's talk about one simple principle. If you're just buying stock out of the expectation, out of a greater full expectation, right? Beyond the fact that you might be the fool, there's the flip side of it. Imagine you're not the fool, right? And then there's a dip like this, a couple of weeks of a dip. If you don't have conviction that this stock is the future and this stock is going to go ballistic over the next 5 years, you're going to get paper handed out of the share, right? Because you have no faith. So it's kind of a lackmus test. And so that's why I'm saying don't buy shares you don't believe in because you're not going to stomach the ride. It's like
That's a great point. And it's something that what you've hit on is exactly what whenever so it kind of justifies that approach to investing, that long-term focus on fundamentals. And you mentioned the greater fool theory, and I've talked about that in the past as well. And I think the greater fool theory works great when times are good. It's just you never know when the party ends. You never know when that time limit hits its end. And you mentioned you've lived through a number of crashes. It's kind of funny because I got into stocks. Do you know what Nortel Networks is?
Yeah, of course.
Yeah. So, well, I asked someone else and from America, and they weren't sure what it was, but so my dad actually worked for Nortel Networks, and he had his pension tied to Nortel Networks. We had a lot of money in Nortel Networks, and that was kind of my introduction to stocks. Was this big failure, this big scam that happened, and it's kind of impacted my views to some degree. Where there's a lot of hype around that company, and it came crashing down very quickly. I have the benefit where I work with people who have worked through the .com in 2008. But I have only been at this for 5 years, or 6 years now, and so it's you kind of have to realize what you know and what you don't know. And when it comes to crashes and stuff, I'm always very cautious about what I say about where things are going to go into the future because I don't have that experience. But I think you can't go wrong if you buy a company like you said that you believe in, because if times are good, great, you believe in the company. If times are bad, you can do that test of, okay, well, is this company going to go bankrupt? And chances are, if you chose a company that you believe has solid operations, that you believe has a good product, that won't be the case. And it's very easy for that's something some of the people at my company, when we have clients over, that's a conversation we have very frequently. Is when when we have calls from people freaking out about a drop, especially back in March of 2020, just a year ago, which is wild. But you get those calls from
Yep.
clients asking about, crashing positions, and you're able to have that conversation of, well, we know this company, and we know what they produce. We know it's quality and things like that. And that's why we're not as concerned about, these short-term fluctuations. It's one approach to investing, but I think it's a very, I don't want to say beginner friendly, because, you can be a professional and do that same approach, but I guess I would say it's long term. It serves a lot of people well.
I swear to God, this morning I got a call, and I hate, the you don't obviously don't do that, but people who manage retail money, you know what I mean? The investment advisors and the banks, like so my friend calls me up, and he has a sizable portfolio, and he's not really knowledgeable because he comes from real estate. So he's not really a stock market. So listen, my investment banker, not investment banker in that sense, but investment managing
Right.
thing. And he says, I need to sell all my tech stock and buy hotels and airlines. I said, dude, first of all, he's like 3 weeks late.
Yeah, no
Where
kidding.
has he been? At this, and I said, at this point, it's probably not the smartest thing he could have advised you. Because this is a really late reaction. It's like trying to resuscitate a dead person. I mean,
yeah, that's crazy, and it is crazy what you see sometimes, and
they just like, what are you talking about, bro? It's already too late. I mean, probably at this point and I told him at this point you're probably better off just writing it out. And I didn't know it's going to end today, I swear to God. But I mean, he just called me before we went live. I was like, dude, I'm so happy I called you. I almost sold the whole thing.
It's the thing is, it's tough. I would consider myself an active investor, but I think there's kind of degrees of active investing, and I think when you get to an end like that, where you're trying to time the market, you're trying to switch sectors very quickly, you have to, it's a whole other game, and it's one that I don't try to play. Like I mentioned, my own bias is long-term value, but some growth oriented.
But it's impossible to time the market, Richard. It's impossible.
It is. No, and I agree.
There's no software or human being or anything can consistently predict the market. It is impossible. That same professor, the only thing I learned from him, the only thing, I swear to God, is the drunk man theory. You know that thing?
No, I've never heard of that.
So he taught me that. That's the only thing I understood in years from him. Well, not years, just 2 years. So basically, he said that timing the market is like trying to guess where the next footstep of a drunk person would land when he's wobbling home.
Oh, okay.
You know that thing? It's actually a known, right? So that thing I understood, and I was like, oh shit, that's exactly. Look at how you remember how Warren Buffett says that the stock market is like the manic depressive neighbor across the street. Like it's so crazy. I mean, how could you? There's no rationale here. I mean, the only way for you to play the game and consistently, at least as a retail investor, stay in the game, is bring the game towards. I mean, it's like, in basketball, if you're a shittier team, you want to slow down the game. You don't want to run and gun against the Golden State Warriors, right? So you want to slow down the game. So essentially, play the long game, play the 1-2 year horizon, 3 year horizon. That's the only way you can have some sort of a level playing field. If you're trying to play these, that's why I don't day trade, I don't swing trade. It's just a roulette at best. Sometimes, but I have Jay Powell on the screen for a reason. The reason I bring him on, I have a theory. It's a little bit wild, so keep it
I'll hear you out.
So Jay Powell basically tried to Superman his way out of this, right? He was like, "Oh, I'll save you. Like, I'll go on this live interview and I'll save everybody." And he botched it a little bit. I mean, it's not his fault, but it got botched, right? It was the reaction from the market was basically nobody bought it. Even though he said all the right things, he couldn't have said it in any other way. So I'm not saying that he did anything wrong, but I'm just saying people were like, "Dude, we don't believe you." People were selling off harder when he was talking. So we go into the weekend. What is the only thing that changed? I mean, the bond yields. I'll show you the curve in a second. It's a pretty steep, deep. They bonds don't behave like stocks. By the way, shout out to the 1,000 people in the chat right now. That's pretty cool. Make sure you go and you subscribe to Richard's channel. I'm gonna put it on the screen while I speak. So, um, what's the only thing that happened in the weekend? Because I mean, something must have happened that people just felt more relaxed and kind of, the swing happened. So I have a theory. It's gonna sound
All right.
crazy. Don't
I
judge me.
love it. I'm waiting.
Okay. The only thing that happened over the weekend is that Kathy Wood posted a 45-minute video explaining what the fuck is going on. And she was basically explaining what he was trying to do. And she did it in a much more convincing way. And she seemed much more confident with what's going on. She essentially went on TV or on her channel pretty much as like, I'm not worried. I'm happy. I mean, I'm a kid in the video game store on Christmas. Everything on is on sale. I mean, I'll take the other side of these trades any day. We're gonna be DCAing all the way down, no problem. We have a 5-year horizon. We don't have an annual benchmark. We don't care. We don't get judged on the annual performance. Blah blah. And she went at it like 45 minutes. And I think because she's such an influential figure these days, I
Mhm.
think that started a kind of a like a snowball effect. Because once you have the first people to come out and say, "Oh, we'll take that trade, we'll take Tesla at 560, I'll take it," and it starts like, and then everybody foaming back into tech. So
Mhm.
I think Kathy did it.
I mean, it could be. It doesn't take a lot to move the markets, right? Like that's the crazy thing, and I'm always of the impression that it doesn't take a lot to move the markets because you mentioned people kind of nibbling at Tesla at a lower price. That can get the demand into the stock again. Where it gets to that resistance line, and that's when I think a lot of technical analysts start hopping in and trying to find that trend, that momentum. Now, I'm not a technical trader myself, but it happens. It's a big part of the markets and why they move the way they do. And I think GameStop's a great example of how that can move a stock so quickly.
That's
I
lunacy.
it
That's
is
lunacy.
lunacy. But what it does is you can have an initial, like, let's call it core demand for a stock, like people who like Tesla, they want the stock and they think it's a good price to buy right now.
Yeah.
They pick it up when it's low. Then you have this other group of people who are the momentum traders, the technical analysts,
Hmm.
and they say, hey, there are people buying this stock that weren't buying last week. We think there's this momentum, and that kind of extrapolates that trend and moves it forward. And it's like it's a positive feedback loop, right? You have more
Yeah.
analysts come in, and that's why you can have these big movements. Um,
And
and
plus, I think it got shorted again.
GameStop or Tesla?
I think GameStop got shorted again. And by the
Probably.
way,
I wouldn't be
speaking
surprised.
of getting shorted, I've posted this on Twitter, and of course, you follow my Twitter
Of
religiously.
course.
So you, of course, saw the tweet.
Of course. Yeah.
So I posted on Twitter that outside of GameStop during the peak, Tesla is the most shorted company in history, and the shorts have lost over the course of the last few years $52 billion shorting Tesla, and they still keep doing that. And I find that amusing. I mean, you might not think that um, you may not like Elon, or you may not think that the energy business is viable, or there's maybe. I mean, you can have a lot of doubts, but these guys are executing. Look at their margins. Look at the ramp up. They're building
Mm-hmm.
factories. They're still somehow profitable. They're generating a lot of jobs. They're meeting their goals. I mean, I know that Elon used to be kind of he used to promise shit that didn't really happen at the time. But I mean, lately he's been killing it.
Yeah.
And
Like Tesla's
why
a
short Tesla? I mean, I mean, they're doing a good job. I mean, it makes no
yeah. Sure.
sense.
I'm not surprised that it's the most widely shorted. I didn't know it was like.
I'll pull
I
up the
guess that would be
numbers.
in
Hold
terms
on.
of yeah. I'm assuming that's in terms of like I guess market cap shorting interest. I guess like on a dollar amount. Um, I'm not surprised. I mean, the thing with Tesla, and like this is where I don't cover Tesla extensively, and quite frankly, it's a company that my own approach doesn't really consider as a value tilted investor. And it's not to say it's a bad holding, but there's just different styles of investing, and I'm first and foremost kind of a value investor, so I don't usually buy positions that are kind of the main reason for their valuation is based on 3 to 10 years in the future. It's just not usually where I focus.
Mm-hmm.
But I think with Tesla, I think the thing with their current valuation is based so much on kind of their startup potential, right?
Yeah.
Like I think right now, cars make up 94% of their revenues. But a lot of people are valuing Tesla as not an automobile company, but as automated driving, power, all these other segments that right now aren't currently a big part of the business. So I think you get a lot of short interest when you have a company like that, where the promises are so high versus what they're currently doing. And it's not to say that Tesla doesn't have amazing technology. I think they do, but I think when you have that high valuation, that's when the short sellers start to come in, because a lot of them, it's kind of like basic, efficiency market theory that, the higher these valuations get, the more short interest it attracts, and that should bring valuation down. The problem is that it doesn't usually, you mentioned that the short sellers have lost so much money. And I think
there's a chart here. I overshot a little bit.
Yeah.
40 billion in 2020.
Geez, that's crazy. Apple's next, eh? That's surprising. I mean, I know they're a big company, so obviously they're going to attract people, but I'm surprised Apple's so shorted as well.
I think shorting stock in general is not a sustainable business long term. It's a problematic approach.
Oh, by its very nature, it's not sustainable.
I mean, how would you run risk on this?
Yeah. What I will say, though, I think with the GameStop thing,
you know what I mean? It has no cap. I mean, how would you run? Oh, never mind.
Well, I think so. I know with the GameStop thing, short selling got kind of blasted as being an evil practice, if you will. And like, I don't short positions myself. It's not a practice. I prefer to go long, because short positions by their very nature, the name says it's a short-term interest that by its very nature cannot be a long-term position. It's very difficult to keep a short position open, and you're usually paying fees the whole time to do so. But when it comes to market efficiency, which some people don't care too much about, but I think it's really important to keep the markets working, as you need this market efficiency. And short selling plays a very important role in market efficiency. The problem is, I think it's becoming less popular, and I think I truly think that's been part of the reason why we've seen markets do so well over the past little while. The way market efficiency is supposed to work is that you have these arbitrageurs who are able to, like, Tesla's a bad example, but let's say Tesla and another promising, it's hard to compare Tesla to anything, but let's say Tesla and GM. I know people are going to rip me apart for making that comparison.
LaBelle is right. It's true. Tesla fans can be really emotional, but it's a cult brand.
It is, sure.
It's a cult brand.
There is value to that. Like I even as a value investor, you can recognize that there's value behind the brand. But with market efficiency, let's say we have, I won't continue with that example. Let's say you have a mining company and a second mining company, and they both mine gold. And let's say that this one's more expensive than this one. In a perfect system, you would have arbitrageurs come and they would go long the cheap position and short the expensive position to try and rebalance the valuations towards where they should be. I think that's become a lot harder in the current environment where things keep going up and up and up. It's really discouraged short sellers. And I mean, with GameStop, where you have people actively going out to punish short sellers, I think I'm not going to stand here and say that it's the end of the efficient market hypothesis, but I think, people kind of discount how important short selling might be to market efficiency. All that to say that I think it's not surprising to see a company with a high valuation having that much short interest. I didn't realize it was by that degree, though. That's wild.
So speaking of GameStop, I had a guy on my stream. He's one of my Patreons. I need to check up with him what's going on. But in the previous cycle, when it went up to 400, and you remember, and change whatever. Mm-hmm. So I had him on my stream, and he was up by 1.4 million.
Wow.
And he was a broke kid, bro. Like broke kid. His dad is an expat in China, and he was buying it on margin, bro. and he wouldn't sell it. And we tried to convince him to sell it. I even got Jason Raznick from Benzinga to bring him on and say, "Hey, listen, at least sell half." And he wouldn't
Mhm.
budge because of this, like you said, this religious belief that it's some sort of a revenge game. And I think it's really, though we've never seen this before. I've never seen people religiously short squeeze. I've seen opportunistic short squeezes. I've never seen this like, well, we're gonna, Robin Hood our way back into this. You know what I mean? It's crazy.
Mhm. It is crazy, and I think, like again, I really don't think that this is something that's going. I don't think it's like a paradigm shift in how markets are going to work in the future, but it is a crazy instance in history. To see a group of people get together and like you say, punish a short seller, like to
It,
religiously go after someone.
even though
Uh,
it's not really punishing a short seller, to be honest. It took me a while to understand that, but towards the end of that, I realized there are hedge funds on both sides, bro.
Oh, absolutely. Yeah. So I think actually they own like the majority of GameStop is owned by at least institutional investors.
Yeah.
So I actually looked into it a while ago. I don't remember the figure, but it was quite a bit is owned by institutional. Now, some of that institutional was, companies like BlackRock, which are technically retail investors at the end user is a retail investor, but there were hedge funds as well that are big owners of GameStop. And so that's it. Like, when people say, short, and like I have a video on short selling, and lo and behold, it did really well when when GameStop
Mhm.
took out. But
YouTube loves relevance.
they
YouTube.
they they love those buzzwords and that stuff. And that video was like from a year, maybe 2 years ago.
I
But
want you
the
to
top
see this, by
comment,
the way,
yeah,
after you finish. Look at the number
uh,
here.
this is for short interest, or is
Yeah,
that GameStop?
it's GameStop short interest, 37, 36%. I mean, that's extremely high.
Mhm.
So
Short interest is 200 and over 250% of the float. Is that what you're saying?
no, short interest is actually 36.5%
Oh,
of the float.
36.5%. I see.
It's extremely
Okay.
high.
Yeah, yeah. I mean, like it's the thing with GameStop is, from a fundamental standpoint, if you look just at their earnings and stuff like that, they're not a very, solid business in terms of their operations. The revenues have been falling, but that's not to say it's a buy or sell, because valuation plays a role as well, right? You
Hmm.
can, if you pay pennies for a crappy company, you might still make money. But when people were finding out that more than 100% of the stock was shorted, that's when we started to see this initial push. Um, so
I
it's
think they're pushing
36.
it. 36, you can short squeeze. It's very
Oh
high.
yeah, yeah. I
Especially if you I mean, if they already did it. I mean, at 200, already somebody's going to get shellacked again. I can't believe people dipped it back into this well knowing that there's an alligator down there. You know what I mean?
yeah. I mean, it's like everything, right? Overconfidence plays such a big role, and it goes both ways. Like
It feels like a Homer Simpson meme, where he presses the button again and again, and he doesn't learn that he needs to stop to press the button. It's like,
I
why would you?
I think it's overconfidence. I really do. I think it's, and quite honestly, like if you had asked me right at the bottom of, like, what is that, in February, where it kind of bottomed out again, if you had asked me in February if I had to tell you where GameStop was going to go, I probably would have guessed down. I
Yeah,
fully don't put any stock into where I expect. But there are people who work these jobs who think, well, the short interest thing, that's all done, over and
yeah.
done with. Now's the time to really clamp down on this company, because even then it was still up from a year ago. The bottom there that you have your mouse, that
Uh,
before its recent rally, that's still more than
yeah.
quadruple what it was a year
Yeah, yeah,
ago.
yeah. Because it was $15, $11. Like October 2020, it was 13.
Mm-hmm. So the short interest never left. Like those people were
Mm.
anyone who was looking to short, who might have exited with the initial rush, were probably just waiting on the sidelines for to make sure things had settled
They
and
don't
things
go
like
on Wall
that.
Street bets. If you go on the Wall Street bets, you know that a lot of them didn't sell.
Yeah,
Uh,
well,
even
that's it.
Kit,
And
they're
just
going
like the
they're
guy you
gonna
had.
Well, even Keith Gill wasn't selling. He was testifying, and he was like, I didn't sell a single share. Blah, blah, blah. Well, he sold a little bit, but after the initial cash out that he took 15 million, or
Mhm.
whatever. Anyways, a lot of them still hold a lot of shares, but I think most of it is momentum, on momentum trading. People are like, oh, it's going up
Yeah.
again, and there's this snowball effect starts.
Yeah,
I don't think
especially
it's
when you have the daily volatility. I think a lot of people, I don't think it's everyone on the Robinhood app, watching the stock price on a daily basis and hitting buy when they see the price go up. I think you have a lot of institutional money playing around. And, with trends like this, which are, breaking news and all over media, it's attracting the attention of high frequency traders as well, right? Those companies that are trading on fractions of a second and influencing the stock's price higher. So there's momentum traders, there's high frequency traders, there's all this. I'm kind of grouping it all as institutional money just because it usually is. There are some people who do that personally, but most of it is institutional.
yeah.
And so when you have, like, let's say 20% of the movement is tied to retail investors, you usually have, like you said, institutional investors driving that other 80%, taking advantage of that retail trend, making it look bigger than it might actually be.
Uh, I agree. I want to ask you a question. Ervin, who's a moderator on the channel, and he's always here in every single stream, including on my second channel, which is pretty insane. So he asks a really important question, but I'm going to challenge you in a second. So he's
Sure.
asking a question, which I mean, the classic answer is definitely right. If somebody asks you, well, I don't know if you can see the comment on the screen,
Yeah.
but he's well, the classic answer for me would be to say definitely buying a index ETFs for S&P 500 or the Dow, whatever. It's always better than investing in individual stocks if you just hold it for 5 to 10 years. Uh, I don't think. Sorry, yeah, don't get offended, but fund managers can't beat those over the course of 10 years consistently. Sometimes they have good years, bad years. I mean, sometimes certain fund managers win the lottery, right? But I mean, as an aggregate, if you take all fund managers versus all index ETFs, I mean, it's a much safer investment, and you get pretty good returns. I mean, that's pretty much what Warren Buffett has been doing for quite a while. I mean, however, I'm going to challenge you here. I think it's beginning to change a little bit, and I'll show you why. So, if you take a look at this thing right here, I'm going to pull up something on the screen, and I want you to see this chart. How do I pull it up? Hold on. Okay. Okay. Got it. So check this out. Um, you've seen this.
Yes. Yeah, I've seen this
So
before.
does it not negate what we were just talking about?
Yeah, I mean, it's a whole
Wait.
debate.
Why don't you explain to the audience, because we don't want to. We're getting too technical here. So
Sure.
how
Yeah.
did you
Yeah.
explain?
So, if I'm not mistaken, this is the S&P 500. Yeah. So
That's
S&P
the
500
top
top
five.
five top five companies that
Yep.
make up the S&P 500. Used to be called the FANG stocks, but Netflix isn't in there anymore. But
Yeah.
the top five companies making up I knew it was over 20%. It looks like it's even
It's
like 22,
21-ish. Yeah. Yeah.
21-ish, maybe. Yeah.
Yeah.
So, basically saying that anyone who holds an SP 500 ETF is 1/5 of their money is in those top five players. And you could have a whole debate about the right indexing approach, and that's kind of the problem with a market cap weighted index, right? Is as you have these Goliaths come forward, which really the 2010 decade was a decade for the Goliaths of this stock world. The Amazons, the Facebooks, the
Yeah.
Googles. It was a remarkable year for these giant tech companies. And the problem with the market cap weighted index is you get more and more heavily weighted towards these companies. If these companies keep outperforming, come maybe next decade they're at 50%. Now, is that bad or is it good? It's hard to say, because on the one hand you got exposure to those high growing companies. On the other hand, you could argue that you have exposure. You're not as diversified and things like that. And I think there's a valid argument on both sides. I still think an SP 500 ETF isn't, I'm not going to stand here and say that it's a bad choice. At the end of the day, you're still taken a fairly passive approach to being exposed to the markets, but there is that risk, that growing, and it's part of the reason why, I don't personally invest in the S&P 500 ETF. I don't hate the idea of indexing. I just like to have more control over the individual positions and the weighting like this. I don't often have a position that's over 5 or 10% of my whole portfolio.
So you don't do ETFs at all? Not even managed ETFs?
Not at the moment. I do sometimes. And like.
What about the Berkshire Hathaway, which is sort of an...
I don't have Berkshire Hathaway myself, but and that's something to worth mention too. Is some stocks are inherently like ETFs, right? Like
that's what I was about to say. That's kind of
company.
an ETF. Yeah, it's kind of an ETF.
And in Canada we have one. It's Brookfield Asset Management. It's kind of a similar thing where it's kind of like an infrastructure company, but it's a massive company that is very much like a holding firm that has exposure to all these companies. So I'm quite frankly pro diversification, pro ETF and stuff like that. Part of the reason I use individual stocks is I'm still holding my trade with my company. So when I make a recommendation, if I have the capital available, I'm putting my money behind that as well. Because I want to, it's kind of an alignment of interest, right? I don't want to be making flippant recommendations about, oh yeah, sure, like buy this and buy that. It's kind of a discipline thing. But mind you, I also do have a lot of cash at the moment. That's partly tied. I've mentioned again on my own channel that I'm going through home renovations right now, so that's a different type of investment, I guess.
No, but I have about 30% in cash right now just because of these two little red dots. I mean,
so you're pretty. Are you bearish on the market then?
No, but here's the thing. I know that we haven't seen it. This was just a taste. I mean, at some point, here's my theory, right? So you have this random. Okay, so I did this crazy video on my channel where I was talking about what's going on with the market right now, and I was using a train as an example, right? And I was like, okay, so you have this train, and right now the train is cruising and shit. Everybody's sipping coffee like you are, like me, right? Everything is like music is playing, and all of a sudden they told me it's called the conductor, the guy who drives the train. But I thought the conductor is the guy who checks the tickets. That's in Russia. The conductor isn't the driver. It's the fucking guy. The conductor.
That's a good point. I would have called them. I would have called the ticket guy conductor too. Actually.
Yeah, in Russia, it's not the driver. Anyway, so the conductor presses the gas all the way through. So what is this? What happens to the train? The train goes spiraling out of control. So essentially, what do you have right now? You have the gas. The accelerator is all the way down. So shitload of money thrown into the market, right? Junk bonds being bought, like lots of money, everybody swimming money, stimulus, here you go, here's another $1,000 and interest rates are zero. So it's like a nuclear reactor where all the things are like throttle all the way up. So it's a very scary situation to drive anything or operate machinery this way. When you crack something all the way up, I have devices that I don't crack all the way up because it's not healthy for the device that long. So what ends up happening, right? Low interest rates, so much cash, plus reopening. Inflation is bound to happen, but people don't understand. I think it's already happening. Look at the raw materials. Look at semiconductors. Look at chips. I mean, just the graphic cards. Automakers are saying, "Hey, we can't fucking get raw materials." And some will say, "Well, that's because of COVID. There's shortages because of COVID," and I get it. But you can definitely feel inflation don't just happen in a day. We just wake up, oh shit, everything is double. No, raw materials become more scarce. There's more demand. Prices go up. Eventually, they roll it down to the consumers slowly, and it's like cooking a crab. It takes time, and all of a sudden, you're cooked. So I think inflation is happening. You can't avoid inflation with so much money being printed, with nobody saving. Everybody's buying goods nonstop. So at some point, JP will have no choice, even though he's such a dovish guy, and I love him for that. He'll have no choice. He'll have to break this train. He'll have to put up interest rates. It's going to be that or crashing the economy. I've seen what happened in high inflation rates. Eastern Europe has been known to go through these. Those are unpleasant. Believe me, it's
Mhm.
right. If you have a choice, you probably would want to crash the stock market and let inflation go out of control. So he'll do that, and you'll know what happened. When the interest rates go up, it's going to be a fire sale. What we had this last 2 weeks is just a taste. So when this is going to happen, Jesus, who knows? This
Mhm.
might go on for another year, easy, right? And so that's my theory. But I'm waiting. I'm waiting for this. And I
I'm
might,
actually
my
I'm pretty aligned with you on a lot of that stuff. So I mean, same thing. Like I put very little stock in predicting what's going to happen. I just I have no idea what's going to happen. But in terms of inflation and interest rates, I think if you look historically, to some degree, monetary policy has played a role in virtually every recession the U.S. has gone through. And like I think the tech bubble, for example, one of the things that popped the tech bubble was rising interest rates, was strong monetary policy. If I'm not mistaken, there was a period of loose monetary policy, and then they
yeah,
had to rein it in. And historically, the Federal Reserve has shown itself to be very, kind of ruthless in maintaining the value of the U.S. dollar. Now, that's good to some degree, because that's part of the reason why the U.S. dollar has become the world reserve currency, is because it has that strict approach. On the other hand, it's like you mentioned, there's going to be a point. There's always a breaking point where the Federal Reserve has its arm twisted, and it will likely, either increase interest rates or do something of that approach to rein in inflation. And you could debate about whether that's good or bad. I think that's just become sort of a rule of nature with the Federal Reserve. Is that's when inflation gets out of control, that's what happens. Now, there's a whole debate about how to measure inflation, and you kind of touched on it. When the Federal Reserve talks about inflation, I think they're talking about CPI and consumer price indexes, price of shelter, things like that, that might not inherently capture, things like oil prices, things like materials, like you mentioned. And those could very well be inflating in price as a result of money supply as well. So it's not there are shortcomings to the measure. Some people are kind of conspiracy theory level of saying that the measure is meaningless, that, whatever the Federal Reserve is talking about, that rate is inherently manipulated to, benefit the U.S. government. But what I will say is that inflation is harder to gauge than some make it out to be. And I think you touched on that. Like, I think,
yeah,
consumer prices is one thing, but remember, it's kind of like an index. An index doesn't perfectly measure the stock market. It measures a basket that it believes is representative. But when it comes to inflation, it's very similar. They're quite literally, they're taking a basket of goods and saying that it's representative of inflation in the country. But if you see rising housing prices, if you see stuff like that, when does that get factored in? That's kind of it's a tricky area. And quite
yeah.
frankly, I don't talk a lot about it because some people are very impassioned. It's kind of like Tesla. People are very passionate about the inflation debate.
Because it's so subjective. I mean, even look at the stock market. The stock
Mm-hmm.
market is a very good example of inflation. At least what we went on for the past. I mean, until 2 weeks ago, and the overvaluation in the market is just because people have more available funds. Every time we get a stimulus bill, stocks go up. I mean, that's kind of a sign of inflation in its own.
Mm-hmm.
Um, when you have so many people, competing for the same commodities or securities, that's what you get. You
Mm-hmm.
can't print endless money. Uh, Please cover Alphen. Oh, okay, sorry about that. So you, I got thrown out of my thought
No,
process.
that's
Sorry.
okay. You can't print infinite amount of money.
Oh yeah,
Yes.
it's just a rule of nature, bro. Let's say we're all buying cameras, right, for our streaming, right? And let's say right now, all of us are broke, or let's say 50% of us broke, 25% of us are saving money, and there's 25s who are like, yeah, let's spend, like, single spending, right? Right
Mm-hmm.
now, you have a situation where there's literally no savings at all. Everybody's just out there spending money. It's a really, really simple analysis of this is like textbooks inflation. I mean, it doesn't get any simpler than this, right? It's not really complex. Um, so at the end of the day, here's the thing. As the head, as the chair of the Fed, you have basically two choices. He's probably gotten a rotten deal with the fact he's running through a very dangerous kind of period. But I mean, he took a tough job. But he will have two choices. He will have to choose which grenade to jump on. He's either going to be the guy who crashed tech, or he's going to be the guy who crashed, who inflated the fuck out of the U.S. I honestly, because again, I I've seen stock market crashes, and I think they're extremely efficient at cleaning out the dirt and letting this. It's like the survival of the fittest. A
Sure.
good market crash every decade is healthy. However, once you inflate prices, there's no going back. I mean, it's an irreversible process. I literally seen countries change currencies, change to a brand new currency just because the inflation got out of hand. So there's no going back from inflation. A good stock market crash every decade is healthy. Otherwise, listen what you're doing, Richard. I'll give you an example. Um, so let's say we have two kids, right? We're parents and we have two kids. One kid
Nice.
is a total idiot. He's a doofus. He spends his money on video games, girls, and weed, and has no money. Turns 18, has no, I mean has nothing. Wants to go to college, and we didn't save, right? The other kid was so frugal, responsible, and he saved up like $80,000, and so we only have to pay for half of his tuition, right? Half we already saved. Um, so we can do two things here. We can say, well, Johnny, like the bum, we can punish him. Say, we're giving you 2 years worth of tuition, and you have to figure out the other 2 years. Um, or we can say, well, we'll bail him out, right? I mean, Johnny, come on, he's a good kid. We don't want to fuck Johnny, right? Let's give him a 4 year tuition, and let's give the other kid a 2 year tuition so they can both go to college. What is the message we're sending here to our kids? We're basically saying, well, might as well be Johnny. I mean, we're going to bail you out anyways. So we're perpetuating bad managers and bad companies, but essentially completely annihilating the process of survival of the fittest in the market. So that's why I don't believe in artificially keeping the stock market up. I think it's an
For sure.
unhealthy situation.
And I would agree with you. I mean, like that's free markets, right? Free markets argue for, like you said, survival of the fittest. And I think that's a point that I like to bring up a lot too with new investors. Is we got kind of the same flow going on.
Yeah, but I wait 3x your I have 3x your weight. All muscle, by the way.
Of course, yeah.
All muscle.
But so like when it comes to new investors, I always like to highlight that the past decade has been almost coddling for investors. We've had low interest rates, which are a tonic for companies, and we really haven't had March was something interesting. The pandemic has been interesting, but it hasn't hit the stock market like past recessions, at least long term, more than over a 9-month period. And I think, like what you mentioned, where you have people who are taking on trading, people who are taking on investing, and they've just started over the past, let's say, 2 years, 3 years. It's important to be humble and to realize that you have not experienced a full business cycle. And this is something I'm reminded at work every day because I've only been at it for 5 years. I'm the same boat. I'm fortunate that I have people I can talk to who have been through all that stuff, but exact same boat as everyone else. But it's important to know that because, some people, they get the impression that investing is easy, that trading is easy because they've been able to make profits. And then, they start playing with call options. They start playing with leverage and things like that. It's done very well over the past few years, but we haven't gone through a full, true cycle in terms of the stock market anyway. The economy, and that's the thing too, is we've had that divergence where the economy suffered while the stock market has done very well. But I'm inclined to agree with you that, interest rates are probably going to be the near-term threat that's going to, put an end to to these, frothy
Yeah,
valuations and things like that. I don't try to predict when that's going to happen. And quite frankly, as a long-term investor, I don't lose much sleep over it. You focus on companies that you like, you focus on the
exactly.
long term, and that stuff will come and go. But there is risk there.
Dude, people are laughing at me. By the way, shout out to the 1,500 people in the chat right now. You're a celeb.
Nice.
They're coming
Hey, all right.
So while so here's the thing. Before we go forward, let me just somebody said something funny. Thank you for the donation. We'll get a coffee. Is Australia $2? Was today a bull trap or is the correction over? Who knows? I mean, there's
That's my
no
answer
way.
too.
Nobody knows. I hope you were not expecting me to answer this because honestly nobody knows. And if somebody pretends to know, he's full of shit. Um, thank you for the $5 donation. Inflation's like hello, gives me the cream. I mean, it's kind of funny. Here's the thing: people, when I talk about, like, I have a few companies who I'm completely sold about. Thank you, Z Lions. I was literally about to say this right now. So that's like my favorite stock. So
Okay.
I'm really bullish on Tesla, but Palantir for me, and I say it and people think I'm stoned, right? You saw in the comments earlier. I think Palantir, by the way, when you have 3 kids and you wake from 4 a.m., trust me, you don't need to get stoned. It's just a natural high, high on life. So here's the thing. Uh, I think that Palantir might be $1 trillion company. Now it's crazy to say for it's a $40 billion company, right? So I'm talking about a more than a 10x in valuation. But I have my reasons to believe in that, and I've done my homework, and I believe in it. It's my opinion, and I think it's going to happen. I don't think there's a lot of competitors for predicting the future. So fuck you. But I mean, what's the total addressable market for that? Who knows? Anyways, my opinion. So that's why when they dipped like 20% to low 20s, I mean, who cares? I don't give a shit. If any, I bought a few while they
Mhm.
were dipping. But that's the fun about being a long-term investor. I literally have zero concerns or zero fears. I don't check my stuff daily unless there's like I have to do a live stream or whatever. I mean, it's so liberating not to
Mhm.
check your portfolio every day. You know what I mean?
Oh, for
Um,
sure. Like, and I think inherently, I think would make you a better investor too. You focus less on the day-to-day fluctuations in price,
of
and
course.
you know, it's just been shown that's humans are inherently designed to not be good investors. We have these terrible biases that influence us every which way. So the less you can focus on the daily price movements, which make you treat it like a roulette table or whatever, the better you're likely going to do over time. The Dow bar studies, which a lot of people, I don't say it's not controversial, but some people don't like their methodology. But Dow bar studies have shown that when it comes to mutual fund investors, the number one reason they don't perform as well as the index isn't actually strategy. It can usually come down to psychological factors like pulling your money out when things are down and things like that. And to me, it just speaks to how big of a factor that really is. It's not to say that stock, the stocks you pick don't play a role, but I think you have to say that's half the battle. The other half is just your mentality, like your psychology, and being able to hold over the long term. And that's why you have so many professionals, people who have been in it for the long time, coming forward and saying, you know what, a buy and hold strategy it's just hard to go wrong with that. Sure, some people like to try and time the market and things like that. But it's just, there's very little research to support that works. And it's just hard to beat a buy and hold.
The only way to lose in a buy and hold strategy is if it's two situations. You either completely misunderstood, well, there's three situations, right? You either completely misunderstand the company or its business model, or your due diligence is shit, or they hire a bozo manager that kills the company, which happened before, or they're fraud of some sort, like a Wirecard or an Enron or WorldCom or
Mhm.
stuff like that. So it's good chances. I mean, it's good odds versus the day trading and swing trading when you have literally so much money and resources playing against you, you're with a knife at a gunfight, and
Mhm.
that people also have machine guns, and you're with a KitchenAid. I mean,
Well,
it's hard.
it's a hard game. Yeah.
Why would you play that game?
Yeah. Well,
Uh,
and I think too, especially lately, and maybe maybe I've been going down the YouTube click hole too much lately, but I've been seeing a lot of like kind of bad videos when it comes to investing advice and stuff like that. And
oh,
I
don't get
think
me
again,
started on this.
I think again, it's tied to that short term performance we've seen where the stocks have done so well that, and it's exactly tied to what you said about efficiency, right?
Yeah.
You don't those strategies and those approaches aren't being nipped in the butt like they might when things are
I want to
doing
tell you a
better.
story that's going to blow your mind before we sign off, because it's our
Sure.
stop time. So, I quit my job. I gave notice in October, and I've been doing this full time for the past 5 months, and I've been loving it. It's a blast.
Awesome.
I'm never going back. Listen, when you hit 40, it's different. You're a kid. I mean, you're just getting started. I got so burned out from this corporate life. It takes a toll on you. When you get
Mhm.
older, you want to spend time with your kids. Uh, so that's not the story. So check this out. So one of my clients, I my last few years, I worked for a big four consultancy. I'm not going to say which, but what we did was transactional advisory work. So essentially, a client would come in and say, "Hey, we're considering buying company ABC. Here's their financials. Here's the phone of the CFO and the CEO. They'll cooperate. Ask them whatever the fuck you need, and find us either way to get this deal cheaper, or if there's any major red flags, let us know so we don't nickel at this thing."
Wow, they
so,
were ahead of their time.
so right. So one of my clients for years, it's a constant client of the firm I used to work for. Is a public company, and one of these kids on YouTube, there's a lot of them. He's very popular. He makes a video about them. Now, not only he misspells their name and mispronounces their name, which I found really amusing. It's like low level research. He completely misunderstood their business model to the point where, like, he, the kid is just, what the hell is this? It's like describing an apple as an orange, pretty much. It was that crazy. I was like,
Right.
and he said, "Oh, this thing is going to 7x, bro." The CEO of the company knows it's trash.
That's
I'm not
funny.
going to say which company, but so this the quality of information um, on the internet in general, for as far as investment advice. Just
It's got a ways to go.
yeah.
I think a lot of it is the internet's an interesting place versus if you go the formal route, you get a stock professional to work with. There are downsides to that, but at the very least, they've been registered. They have to disclose conflicts of interest. They have that fiduciary duty. I'm not saying
Yep.
that's everyone, but there's that side of the investment field. When it comes to the internet, it's almost like investing in stocks. You have to do your due diligence about who you follow, and it's kind of sad because a lot of people present themselves as something, as professional stock pickers and stuff when they've been at it for such a short period of time.
But that's why I don't believe in stock pickers. I don't do. I'm not a. I hate that term. I cover the news. I offer financial education,
Mhm.
and occasionally I'll share my due diligence about a stock. I hate this stock picker stuff. It's just
And I'm inclined to agree. Like I think I don't think there's a lot of value in getting your stock picks from YouTube. That sounds even ridiculous coming out, but and on the one hand, I think people should be allowed to do what they want on YouTube in terms of if you are someone who wants to share your research, all the power to you. I think people just need to better disclose who they are, their
well,
qualifications, and qualify the work they put out. Because I think you have a lot of people that give this image of like I've been a successful trader when they've been in it for such a short period of time. Like I think as long as you qualify and you say, hey, like I'm just a guy doing research. I've taken a look at these stocks, but I'm not a
yeah.
financial
Dude, I made a
professional.
community post on my channel a month ago. I was clear. Hey, I make significantly more money from this YouTube channel than I do
Mhm.
from my investments. Just
Of
so you guys
course,
know,
yeah,
and I was really clear about it. I said, listen to me. This is not. I'm not Warren Buffett. Just a guy on the internet that does financial news and covers some stocks that he likes.
Mhm.
that is, and I never saw anybody go out and say that. Um, but maybe they're all doing millions. I don't know. Maybe they're doing so I don't know. I
Maybe,
honestly
but
don't. I'm not
that's
cynical.
it.
Maybe they are doing millions. I mean, in this small bull market, who knows?
Yeah,
Um,
I just wish we saw more of that kind of attitude, more of the, just be upfront.
yeah.
And I don't care if you say, these are 5 stocks I invested in, but just qualify and say these are 5 stocks I invested in. I
By the way, every
did
video I
research.
do, I say that every video I do,
Yeah.
I say either I don't have a position, either I have a position, and if I plan on opening a long position or a short position, I'll never do a short, right? But if I plan on opening a long position, I say, hey, I don't have a position, but I'm considering
Yeah, of
starting a
course.
long position. And every single video, I'll say that.
Mhm.
And
It's
if I
so
make
important.
if I make a due diligence, if I share due diligence, I won't act on it before I let the video cook for a few hours. I'll give you an example of how it cost me money. So I did a Patreon post about CrowdStrike. I was like, oh shit, CrowdStrike is really, I like it at $177. I think it's a massive industry. I think economy 2.0 reopening, everything's
Mhm.
digitized, cybersecurity is super huge. There's room for all of them, for Fortinet, for Mimecast, for CrowdStrike. I like it. 177, I think it can go all the way to 200, 220 within the next 2 years.
Mhm.
So did my due diligence, posted it, and by the time I let it cook for a couple hours, at noontime, I went to do the trade, and it was already 181. So, but I was happy that it happened because it kind of made me say, okay, this is why I do this. This is why I wait, because
Mhm.
I don't want to do the trade at 177, and then people, oh, by the time we saw your video, it's, you know what I mean?
Yeah, and I mean, geez, like that goes into that whole area when you get into, signal groups and stuff like that, where there's kind of that fine line that's you have to be very careful with. Not even just in terms of like trying to be, fair to your viewers, but also in terms of legality. Like
Yeah.
I mean, like Roaring Kitties, like that whole story, I think
Well,
was blown out of proportion. But
but he was licensed though. That's the problem. They made him
mm,
register for no reason though. I didn't understand why they made him register.
yeah, that is weird.
He was
And
doing research.
yeah. Yeah, because from his opening statement, it was he was teaching people, if I'm not mistaken. So
Yeah, he,
yeah,
he was.
it's a strange world,
I don't know. I don't know. I'm just
and
saying.
the
Yeah,
internet, like we're just not prepared for what the internet's doing with financial services.
that's why. That's why you and like listen. I'm on the spectrum of let's call it compliance, right? You're
Mhm,
way on the what, because you do have a job right now, so you purely do just educational financial content. I'll
mhm,
dabble in some due diligence sharing sometimes. But if you take a look at, most of my content isn't that. It's more kind of the news like we're doing right now,
mhm.
stock market trends, and I just enjoy these more than the
Yeah.
diligence. They're a lot of fun, and people seem to respond better to them than they seem to my stock due diligence.
Mhm,
Um, so I just, I go with whatever the audience wants. However, if you go on YouTube, you'll find a lot of channels that are on the other end of the spectrum where it's a complete nonsense. It's a daily fucking spam of get this, buy this, get this, buy this,
mhm.
and it's just
And I
that.
think even further past that, you have almost nefarious players in the space, and uh, things like paid promotion for stocks,
Oh,
things
did you
like
see what happened to me?
no,
So I want to show you something before we sign off.
sure.
Oh, so before that, are you familiar with this channel?
I don't
Uh,
see it.
this channel.
A couple of cents. I think I might have heard of them, but
You need
I
to
haven't
check out
watched
this
them.
stuff. He's legitimately one of the best. He's like me, so a lot of market news, but also he'll do like a due diligence, and he'll do like a live DCF for 3 hours to let people see how he
Wow,
does the
cool.
DCF. He's an actual Wall Street analyst, and he's legit. Like he actually, you can see. I mean, you can tell who's the bullshitter, who's not. Um, so his name is Justin. He's like a, you can see. I mean, his speed DCFs. I've never seen anybody work that fast.
Oh, he does them like he puts them together on the
No, no, no,
videos.
and and you know how you know he's for real? No mouse. It's just one of what they
Oh
do.
wow, like using tabs and tabbing
Yeah, that's
through.
how they
Oh
do it.
yeah, that's
I
funny.
could so you can see like when you see no mouse, then you see like okay, they used to cut mouses when I was. I mean, I'm old, but now the
No
wireless
kidding. Jeez.
yeah, yeah, but mouses they waste time. I mean, it's much faster. Anyway,
Oh yeah.
we're getting sidetracked. Anyways, so check this out. So I'm going to show you something. So this is my Twitter. I'm going to pull it up on the screen right now. There is a reason I'm doing this, not to promote my Twitter. Chill. Um, so I tweeted this. No, God, no. Can you see this on the screen right now?
Yeah. Yeah.
Okay, so check this out. So I'm scrolling down. Yeah, this is the one. So check this out. What this lady sent me. Can you see it, or do you need me to make it a little bit
No,
bigger?
that's good. I got it. Yeah. Jeez, it's wild.
But
Yeah,
wait,
40,000. You know what?
wait.
think
There's more. It doesn't end there. Wait. Check this out. So what I did, I immediately posted this on Twitter, on YouTube, and I was like, "Look at what these guys are doing."
Mhm.
So she sent me this, basically threatening to sue me if I don't
Oh,
take it
jeez.
down. And I want to show you my response because she didn't know I'm Russian, probably, because that's not a good way. I mean, Russians don't respond well to threats. And this was my response. Can you read this?
Yeah. That's wild. You know what? I got the exact same solicitation
Oh shit,
for the
bro.
exact same ticker.
Oh wow.
Yeah, and that's it. Like,
And
and
by the way, I said it in my videos, I want to say it here. This is not lip service. I honestly don't have any idea if the company has anything to do with it.
oh
It
yeah, I
might
didn't look at the company.
it
And
might be just
that's a good point
a
to
guy
highlight.
yeah, trying to pump and dump some
It could
random
be
stock.
it could
Yeah.
be that. It could be even worse. It could be trolls. You know, that's the thing is you never know.
Yeah,
Like,
you never know who's behind it. So I was
yeah.
like, don't assume it's the company pumping it because it's you never know. It just might be some guy or competitor. Or it can be a million different things.
Mhm.
Anyways,
That's
so you just saw
it's
it,
nuts. All that to say, the
bro.
internet's a
40,000.
scary place when it comes to
But it's a
stocks.
lot of money when somebody offers you
40,000, yeah.
but there's no way. I mean, I'll never do it, bro.
But what I will say is I think smaller creators who get that same email,
Yeah, much more enticed.
it's more enticing, right? If you don't know that you've made it on the YouTube platform, and I think that's kind of the problem, right? You have this conflict where, but what I will say is if you are a smaller YouTuber and you get something like that, there's so much more value in keeping at it and earning the trust, like honestly earning the trust of your viewers than, you know, getting an upfront payment that erodes the trust of your audience. Not to mention the legal implications of of pumping a stock for payment.
There's no legal implications. It's just illegal. I mean, it's quite simple.
Yeah.
Anyways, listen, but we all evolve as creators. You evolve, I evolve. We we don't stagnate. I'm definitely trending more towards markets and news and kind of broad analysis.
Mhm.
Partially because of this, partially because I feel that if I just do more of these due diligence, I'm becoming a part of this fucking swamp because it's gotten so swampy now.
It's tough. Like I think there you can do it, and you can be, like I use a website, Seeking Alpha, which is just a free. It's like a Facebook for investors.
Which
And
one?
Seeking Alpha.
I'm a pro user, bro. I'm
So I mean, like, if you look at
I didn't
something
hear
like
that.
that,
I was like, is he talking about Seeking Alpha?
yeah. So I mean, like, I like that site. I think it's but people who use that site are usually maybe they take it with more of a grain of salt. The problem with YouTube is you have these.
Oh, I don't use it for the articles. The articles are trash. Sorry, Seeking Alpha. That's what people are like. Oh, Tom, why don't you have sponsorships on your channel? Hold on, I'll let you finish your point in a second. They hate when I interrupt people. My bro, they're like Tom, let your guest speak, motherfucker. It's like I can't change.
That's fine.
So listen. So people, oh, why don't you have Webull or fucking like affiliate links or sponsorships or Robinhood, because I can talk shit about them and I don't owe them nothing. So that's why I'm paying. I could have said, hey, Seeking Alpha, let me put an affiliate link and then give me a free pass. No, I'm a paying member just so I can do what I'm saying right now. Seeking Alpha articles are garbage. Sorry, my opinion.
Oh yeah,
might
sure.
Be, might be wrong, my opinion. However, why am I paying for Seeking Alpha then? Because of this shit. This is extremely comfortable. And when I say this shit, I mean this shit. Sorry, I forgot to share screen. So this shit is extremely convenient. Look at this. Instead of pulling a gazillion different reports, annuals, quarterlies, going back 1, 2, 3, 4, 5 years back, looking at 4 different quarterlies, building this Excel spreadsheet, they have everything here, and it's exportable. And so you can look at the balance sheet, you can look at the income statements, you can take a look at the cash flows, you can look at how many employees they fucking have right now, what's the growth in employees. Look at this in the bottom. So you can look at the changes in net working capital, everything is here, and that's why I use it, because it makes my DCF work much simpler when I have the success. I don't have to dig through the financials. I think this thing is epic.
I think
the articles though.
Well, but so to my point, the articles are free reign. Like I could go set up an account and start posting articles. Anyone watching right now could make an account and start posting articles. I think with those articles, at the very least, people take them with a grain of salt, knowing that it could be anyone. I think the problem with the YouTube space is there's people put more weight into the personality.
Yeah. You see, they hate it when I do it.
What's that? Oh,
they go crazy when I interrupt people. Like, shut the fuck up.
You know what? I think I enjoy it because it's like a good back and forth.
You have the stage for the next 2 minutes. I'm gonna shut up. I'm muted.
Oh well, but I like having the conversation. That's a big part of it. But all that to say that I think with the YouTube space, I think a lot of people put there's a personality side of it, right? With the Seeking Alpha, you kind of go in it with a grain of salt, knowing that it could be anyone. But if you have a channel that's hundreds of thousands of subscribers, there's kind of that personal, not celebrity, but that kind of aspect to it. And I think it's a power dynamic, right? It's very powerful, and it's concerning when you mix that with investment advice. And everyone provides the disclosures that they need, but at the end of the day, I don't know. I don't think the internet's ready for the next tier of investment services. All right, you can come back now, Tom.
Like in hockey, there's the
penalty box.
I'm
Canadian, of course box. I know.
I'm Russian, so we're better than you.
Yeah, that's true. Actually, we're always neck and neck. Yeah.
No, there's no neck, and there's no neck and neck. We're better, bro.
Okay. All right. Well, maybe we should wrap this up then.
Dude, come on. I mean, there's 2 things Russians are the best at. Well, 3: chess, hockey, and vodka.
I'll give you the first and the third. I'll contest you on the second one.
Here's the thing about you Canadians, you're so gracious and nice until it comes to hockey. You become wild animals. Once it gets to hockey, you become so wild, bro. I
was talking with a friend about that, actually. It's wild because it's probably one of, like, aside from MMA and stuff, hockey is such a violent sport. So it's kind of funny when you have a bunch of Canadians beating the crap out of each other on the ice.
Dude, in Russia, we don't even have a puck half the games. There's no budget. There's literally you just go at it, bro.
That's why you're so good then. That's why you're so good. You work with the elements.
Okay, here we go. Some Canadians are waking up. Look at this shit. It's people. Here you go.
There we go.
Yeah. All the Canadians are going crazy, bro. Okay, so I'm sorry. I love Canada. By the way, I should mention. No, I'm not being cynical. It's one of my favorite countries. That's true, actually. Yeah, but all Eastern Europe in general are really good in gymnastics. Romania,
that's a good one. Yeah.
So I'll tell you a story before I let you go, because we need to wrap it up. So I was traveling through Mexico years ago, and Mexico, there's no Russian really food. I mean, there's not Russian culture. So I ended up meeting a guy. I really became, you know, how when you travel backpacking alone was years ago. You are more open to meeting people. It's not like when you go
Sure.
with your
Yeah.
family.
Yeah.
So I met this cool kid. His name was Jason. He was working for Cirque du Soleil, and
Wow.
he was like a rig master. You know what I mean? And
Yep.
we hang out. We got stuck in Hurricane Wilma. So you understand what this is 2008. Hurricane Wilma hits. We're in Tulum. We go through the hurricane. We come out. He says, "Listen, I'm going to Mexico City. Why don't you come with me? We'll hang out in Mexico." They put up with the best hotels, like 5-star hotels, whatever. And I hung out with him, and then we went to the show. So I saw the show, and then we went to eat lunch. And all of a sudden, we walk into this. I want to say trailer, but I mean like a massive trailer. Like imagine like a building size trailer. Walk
Okay.
in,
Wow.
just Russian food, like my grandma's food, only Russian food. Like I mean, professionally made. I haven't
Wow.
seen. And all of a sudden, I realized all the fucking acrobats are fucking Russian.
No
That's
kidding.
and oh shit! It's like I realized that all of them are Russian or Romanian or Polish or whatever, but it's
Right.
the same food. It's
Eastern
so
European. Yeah.
Eastern European food, which I haven't eaten for years because I moved away from Russia years ago. It's like, oh my god!
That's
It's like
cool.
I went all the way to Mexico City to eat pelmeni and
That's
borscht.
wild. That's a wild
Yeah,
story. That's cool,
yeah. Yeah.
man.
Anyways, listen, Richard, it's been a freaking blast.
Yeah, it's been fun.
Congratulations on your YouTube success. Your channel is
Thank you.
popping. You've been killing it. If we still have 1,200 people in the chat, please make sure you go and subscribe to Richard for your own sake. One of the best channels on YouTube for financial education. I'm not just saying it to be nice. I honestly think the channel is, if I mean, if you like it, entertaining education about anything financial, that's the channel for you. Production quality, AAA, writing AAA, topics, all top notch. Of course, quality of information is hands down one of the best on YouTube. You can also follow Richard on Twitter at the Plain Bagel with underscore, and make sure you do that. And if you haven't done so, now would be a good time also to send Richard a nice thank you gift. Send him a bag of shit in my behalf.
Yeah. Just send it to Tom's address. He'll
Exactly.
he'll put that up.
I'll pass it along.
Thank you,
Hey,
Tom.
listen.
That's so nice of you.
I had to end the compliment with an insult. I just can't help myself.
It's a Russian thing, I guess.
Yeah. You're Canadian. Oh, people are subscribing. Here we go. Somebody says the bagel is toasted. So okay, here we go. Subscribe.
Thank
Let's
you.
go. Yeah.
Thanks, guys. And it's it can be boring content sometimes, but I enjoy it.
So we should probably do. Do you know Patrick Boyle?
Yeah. Oh yeah. Yeah. I've
We should
spoken with him
probably
a few
do like a
times.
triple stream with you, me, and Patrick. I think it could be a lot of fun. I had him on
Totally.
the show a few times. He's actually a lot more fun than you would imagine because he's a really funny dude. So
Yeah.
we should
Yeah. He is.
let's set up like a three-way stream.
Sure. Yeah. Hey, I'd be down. I'd be down, man.
Yeah.
That sounds cool.
Good. Okay, guys, thank you so much. Tom, why you not stay home time alone? What? Oh, I think he means why don't I stream on my own? I still stream on my own, but it's just more fun this way. I mean, there's nothing
It's
like a
hard
good
to
discussion.
stream. You know what? I have respect for people who can stream by themselves and be engaging for that long period of time because it's tough.
I think it's one of the most emotionally taxing things you can have, bro.
Yeah, I don't know if I could do well on that. So, but I love having the conversations. I love chatting with other people who are passionate about investing and things.
Of course, we have people with their mind in the gutter.
Oh, of course. Yeah.
Anyways, Richard, thank you so much.
It's been a blast, Tom.
Shout out to all the Canadians in the chat. We love you. We love Canada. Maple Leaf all the way. Hey, we'll see you guys in the next stream.
Cheers, guys.